What's up, guys? I knew this day would come. Today is the day I have to talk about, my growth portfolio versus my dividend portfolio. I get so many questions about why I don't talk about my growth portfolio here on YouTube, and I primarily just make videos about my dividend portfolio, obviously, and my Roth IRAs, and I never ever bring up my growth portfolio. And there's a reason for that. I want to get into it, and I really just want to tell you why you need to be careful when thinking about a growth portfolio, and especially when listening to other people about theirs. First, the elephant in the room, and the comment I know that I'm gonna get, like, why can't you have both? Yeah, you can have both. I have both, right? And people are gonna defend one side or the other, which is kind of why I never really made the video, because people are just gonna tell me what their opinions are on it, and I don't really care that much. Personal finance is personal, and you need to do what you want to do. But I do get so many questions about it. Brad, what's in your growth portfolio, and this, that, and the other thing. So let's talk about the reasons why first. Guys, I just passed 19,000 subscribers. Every time I come on here, I'm talking to a pretty large crowd. And even though myself and others will say, like, this is for entertainment purposes only, I know there's out there people listening. I know people are following along and maybe sometimes using the things that I do as their own. And I have to be cautious of that, even if I give a disclaimer. And I know because I get DMs, I get emails, I get a bunch of stuff where people are telling me, like, oh, I matched your portfolio, or, oh, I picked up those 5 stocks because you did. And, I don't love to hear that, but I know that when it comes to my dividend portfolio, I know it's a safer bet than if I talked about the growth portfolio. The growth portfolio and picking growth stocks, guys, it's so hard. Growth stocks versus dividend stocks are a completely different animal. When we pick dividend stocks, it's very easy for us to go onto the dividend aristocrats and pick some really good ones, and there's a lot of metrics. There's a lot less risk and volatility when it comes to those dividend stocks. So when I talk about my dividend portfolio, at least in the back of my mind, I know that if someone were to take this as gospel and kind of do what I'm doing, that there'd be less volatility and chance for failure, which is not the case when it comes to growth portfolio. Growth stocks are coming in and out every day, right? Let's take, for example, last month. Last month, I got 75 comments a day about how I'm a donkey that I'm not investing in Nikola. Well, a month later, I think they lost like a ridiculous amount. They didn't have a product. And I've talked about it on this channel, but a month ago, that was the growth stock to have. So if I came on here and I was like, oh, the newest growth stock, best growth stock for June is Nikola. And even if like 1% of my subscriber base was like, I'm on board with Brad, let's do that. 1 month later, they're screwed. And I take that in a heart. It was the reason why for so long, I just talked about getting out of debt and I never even wanted to talk about investing, because I have to think about that and what might potentially happen. When I tell people to get out of debt, there's really nothing bad that can come out of it. I tell people, get out of debt, get out of debt. No one's going to come to me 2 years later and be like, Brad, I got out of debt. Why'd you make me do that, right? But with investing, there's this whole like ethical part of it that I need to think about when I make videos. And that's really the only reason why I don't talk about my growth portfolio. And it's a real reason why you, as a viewer, should really do your own research. I'll use myself for example. The first stock I ever bought in my whole life was Apple. And it was back in September 2017, maybe August 2017. I bought Apple. Why? Well, because it was Apple. I didn't know anything about Apple's really company structure. I had an iPhone, I had a MacBook, but I really didn't know anything about it. And I actually bought a couple more then. And now I look back in retrospect, and my philosophy for investing now is completely different, much more intelligent, much more structured, much more organized, much more research-based. But back then I was like, oh, everyone's got Apple, so I got Apple. And that's kind of like, that's why, right? That's why I favor the dividend portfolio over the growth portfolio. At my age, at 38, it's what works best for me. Granted, if you're a little bit younger, like you're in your 20s, you can handle that volatility and that risk. At 38, I don't want to be as conservative as bonds, but I like the lack of volatility that comes from the dividend portfolio. And this channel is based around my journey. And that's kind of why I talk about the dividend portfolio. That's what I'm doing. I'll never, ever come on here and tell you about things or tell you to do something if I'm not doing that. Like another great example, people say, hey, Can you talk about UK ETFs and things going on in Europe? Guys, I would love to do that, but I can't speak intelligently on it. And when you hear from me, I want you to know that it's real, authentic, genuine. I want you to know those things. So I can't come on here and talk about UK ETFs. I know nothing about them. Even if I did research, I'm not living it, I'm not seeing it every day, but my dividend portfolio, I can check Robinhood every day. I see what's going on. I can come on here, I can give you feedback, I can teach you about my mistakes, teach you what I'm learning. And that's really what the channel's about. And that's why I don't talk about my growth portfolio, because there is such extreme volatility. But I will tell you the things that aren't. I have 5 stocks in my growth portfolio. And I guess the growth portfolio kind of started in that August when I first bought that shares of Apple, and I grew it up for years. And for those of you that have been around know that last September, I sold off my entire Robinhood account. It was like 16 grand or something like that, because I had $16,000 left to be debt free, sold it all off, all right? I got rid of it all and I became debt free, and I don't regret it for a second. I was able to rebound that portfolio back, I think, by Christmas. So all of those great small biases, like I think I got Microsoft at like $73. I'll flash a couple of things up from those initial buys. I think Apple I got at like $161. I mean, that's doubled in price, but so the cost bases are really, really high. I'm not gonna tell you how much I have in there right now, but I will tell you that every single month I put $500 into it. I put $100 into each of these 5 stocks, and I'll tell you why I have these 5 stocks. And you could do what you want with it. My largest holding in my growth portfolio, which should come as no surprise because you guys know that deep in my heart, I'm an index fund investor, is VGT, right? Information technology, Vanguard, all my favorite things sprinkled into one. There's a pretty good growth. VGT's been awesome. Even before I sold it off, it did really great. So right now in my growth portfolio, VGT, that's the one that's in there. And that's the only ETF that I own inside my growth portfolio. The next 2 are pretty much growth staples. Apple and Microsoft. So I have VGT, Apple, Microsoft. And if you really had your heart set and you hated dividend portfolios and you're like, I hate dividend portfolios, I'm going to do strictly a growth portfolio, and you put a gun in my head and said, tell me the ones I need to put in it, I want to put 3 in, that's where I'd go. VGT, Apple, and Microsoft. If I only could have 3, I would only have 3. The other 2 are pretty much emotional based, but if I had to just break it down, and if one day I do simplify it, those are probably going to be the ones that are in there. VGT, Microsoft, Apple. Split it evenly, balance it every year, balance it monthly, whatever you want to do. That's what I would do. And the risk of having a bunch of people unsub because people get triggered, I am a... So when Beyond Meat made its IPO, I got in and it's been really good. Essentially, they shot up really, really quick. I got out all the money I invested once I doubled my money, and I've been playing with house money ever since. And I keep investing in them. I think they're going to be okay. I don't think they're going to be in the portfolio forever. I think there's going to be a lot of competition with them. But like I said, that's an emotional one for me, and that's okay. With such a small portion of my net worth and my investing portfolio, you can go with your gut a little bit, you can play a little bit, and that's kind of like the one that I play with. And the other one, the last one I got in October 2017 for like $340 and change, then had to sell it off. I got back in probably double that, I think. I think my basis on that is around $600, and that's Tesla. And it really had nothing to do with the emotional side of what's going on as far in the market and being a short sale. I love where it's at, but I don't really care that much. I pretty much dollar cost average. I averaged up. Now I'm averaging down. But the reason I have Tesla stock is as a graduate in electrical engineering, I really think that Tesla has something. I think they are a long-term company. I don't know if their valuation right now is where it should be. It probably should come back down and be corrected just a little bit. But I think long-term, I really believe in not only electric cars, but everything Elon does with SpaceX, their solar panels, their batteries. I think it's going to be a good company. And once we get through all this early volatility of Tesla and it corrects itself back out, I think it is going to be a really, really good long-term stock to own inside a growth portfolio. So that's why I have Tesla. If I had to choose between the two, if I had to choose between growth and dividend, people told me I'm only allowed to have one. I'm not gonna lie, I'm getting rid of the growth one. It's gone, right? I like the lack of volatility, like I said, at my age. I like being paid for nothing. And I think there's different types of people that the dividend and the growth really favor. If you want passive income because you want to retire early, or you're young and you don't know what you're going to be doing yet, right? And you want that return right now. That's what dividends are for, right? Dividends are for, I need money right now. I want to get paid monthly, quarterly. That's why you would have that portfolio. And that's why people that are getting older, that are or looking to retire, are going to try and build up that portfolio. Because when they retire and they don't have a W-2 job or they don't have money coming in, they can live off those dividends. Those dividends are going to come in on a regular basis. They're not like the growth portfolio where you have to sell to get those gains back, right? So that's kind of like the people, you'd start a growth portfolio for a really long period of time. You don't necessarily need to have a dividend portfolio for a long period of time to see its benefits. You got $1 million and you put $1 million in a growth portfolio, you have to wait for it to grow, to sell it off and utilize those capital gains. But if you have $1 million and you make $1 million portfolio of just dividends and good dividends at a 4% yield, you're going to be getting $40,000 a year right now at 4%. So that's kind of like the framework of, should you get a dividend or should you get a growth or should you get both? It's really up to you. At the end of the day, you're investing, you're saving money. Like it's not that big of a deal. It's not that serious, and don't overthink it. Don't live inside the spreadsheet. Get outside the spreadsheet, relax. The keys to success and the keys to wealth are going to be consistency, automation over time, weekly, monthly, whatever it is. Staying consistent is going to be a big one. And how much can you put in? The best day to invest is yesterday. The second best day is today, right? Hope this video finds you well, guys. If you did enjoy the video, please give it a thumbs up so YouTube promotes to other people and they get to see it. Enjoy your weekend. I'll come back at you on Monday with another video. And until then, stay positive, work really, really hard, and always be kind to other people. Hope you have yourself an amazing day and an even better tomorrow.